We're also tracking what's happening in the IT world. Yesterday we had Infosys. Today we've had Wipro post their quarterly earnings for the fourth quarter. Wipro has turned in a report which is truly higher than what analysts were penciling in. Of course, they were subdued, but in the sense that the analyst expectations of how subdued they would be this time, there is a beat on that. So profits and margins managing to beat street expectations. Revenues have come pretty much in line for Wipro this time. What about the outlook, though? What's the future looking like? And the new CEO of Wipro, Srini Pallia, had this to say about the future. He says that while macro situations remains uncertain, he is quite optimistic about new opportunities. But let's break down the numbers for the fourth quarter of Wipro. And for that, Anisha, my colleague, is standing by here in the Mumbai newsroom. Anisha, how does it look for Wipro after we've seen the numbers from TCS and Infosys only yesterday?
Well, it was a decent quarter from Wipro this time around, largely in line with expectation to actually slightly better on the operating basis, because the dollar revenue was in line with expectation at $2,650 million thereabout. The rupee revenue was also broadly in line at around 22,080 crore rupees coming in, a little below the expectation. Margins, however, were better. The margin performance came in at 16.4% versus our expectation of 16%, and that's why the profitability is also looking healthy. The other good news coming in is, of course, the kind of growth that the company has delivered in terms of the bookings as well, because if you look at the overall booking number that has come in this quarter, it's $3.6 billion, largely in line with what we have seen in terms of the average as well. The attrition has come off a bit. Yes, on a quarter-on-quarter basis, there is a dip in headcount, but that's something that we have seen across the board with all the IT companies, so this is not very surprising. The constant currency decline this quarter was around 0.3% versus our expectation of a decline of 0.4%, so broadly in line with expectations. What's actually important to note is the kind of commentary coming in for the coming quarter, and there the company is guided for a downside of 1.5% to a growth of around 0.5%. Street was factoring in -1 to +1 kind of performance, so smidge below that. But given the fact that the performance from the rest of the IT peers has been weak and the commentary hasn't really elevated yet, maybe this is something that the street will take well, and that's why they're talking about revenue of around 2.6 billion to 2.67 billion in the coming quarters. So that's something to watch out for. So overall, a decent set coming in given the environment and the performance of the peers.
A decent set compared to peers, and we'll see what the future brings. Let's hear it from the management. The management of Wipro joining us. It's great to have the CEO, the new CEO of the company, Srini Pallia, join us on ET Now. Thanks for making the time, along with the CFO of the company, Aparna Iyer, and the CHRO, Saurabh Govil, also with us. Thank you for joining us on India Tonight. And Srini, to you first, congratulations on your elevation. You spoke about acceleration of growth, and doing so with speed and with execution rigor. And that is your top priority. If you can tell us how you plan to achieve this, is it fair to say that it's only going to be the second half when we will start seeing growth come back?
First and foremost, like I said, we have the building blocks and the platform for us to work on. We called out the priorities that we have, and we're going to stay focused on our large clients, our partners, and of course the industry verticals that we want to go after. We also want to make sure we bring in the right business solutions which are consulting-led and AI infused. With that in the context, I think next 2 quarters the focus will be on what's the right solution and approach for our respective clients in those respective industries. Now the prediction from a broader context macro environment is the second half is going to be better than the first half, and hopefully when the second half gets better than first half, we are ready there with our approach and our context for the client.
So second half, we can expect much more. Aparna, this would be good for you, right? Because you did mention that for the big leg up in margins, you will need growth to bounce back. Srini has just said that the second half is expected to be better. Does that also mean that the margin exit rate can be 17% for FY25?
You know, there are a lot of ifs and buts in that statement. What I want to bring your attention to is in the last year, despite a very tough environment, we've actually improved margins year on year. We are on that journey. We stay committed to that. You know, when the revenue trajectory improves, it will give a boost. The operating leverage will kick in, and you will see that lever also play out in our operating margins. For now, we stay committed to delivering in a range-bound manner for Q1.
Right, Aparna. Also, Srini, given the latest headlines on geopolitics, we've been speaking about inflation, we've been speaking about rate trajectory as well. Keeping all these moving pieces in mind, do you see the possibility of discretionary demand revival getting further delayed now?
We don't see discretionary spend as such coming back significantly. But having said that, the data that we have in terms of the Capco growth, right, those are the green shoots. 2 consecutive quarters, Capco has grown both the TCV order booking as well as the revenue. So that to me is a good green shoot in the BFSI sector. Aparna also called out on the healthcare, where we're actually doing well, and that is another industry we think will continue to grow. Now coming back to West Asia, it's, and the political situation that are there in 60+ countries which are going to elections, there are definitely uncertainties. So predicting it, that second half will 100% come back for growth is a question mark.
We will keep watching developments on all of these sectors that you're pointing out. But Aparna, where BFSI growth rate is concerned, it has been strong at 6.6% quarter on quarter. But that partly comes because of a low base. But going ahead from here, do you anticipate a further acceleration in Capco growth rates at least? Or do you think it's still going to be around the current levels?
Like I shared with you, there are 3 things that aid. Of course, there are the seasonal furlough quarter in Q3, which also helps in the bounce back. But nevertheless, it's a bounce back. Secondly, we are looking at good order bookings in Capco, which is giving us comfort that, we are back to winning in that space and clients are wanting to make decisions. This is an encouraging start. It has to sustain for us to be sure of how Capco is going to make a rebound. But we are just staying focused on this quarter. It's a very, very turbulent environment. We've just got to stay focused on execution, and that's what we're going to do, Anisha. It's very difficult to do crystal ball gazing. For now, Q3, Q4 is good, and we're taking heart in that. Capco is a great asset. We are very, very confident that, we're staying very close to our clients, so we're very confident of it doing well when the market returns.
So that's about Capco, and we, of course, we're looking at BFSI, but sectorally, manufacturing, Aparna, seems weak, and also geographically, Europe seems weak. Can you tell us why?
I will go ahead and then Srini can maybe add, like I said, BFSI for FY24 was impacted because of a macroeconomic environment, and typically that sector is most sensitive to that. And added to that, we have exposure to consulting through Capco, right? And that played on to the performance for FY24 for BFSI. In Europe, we've had 2 terrific years. This year, for our portfolio of clients, we are seeing a certain slowdown in discretionary spends, which is reflected in our growth. We are winning in that geography. We are very, very well placed in all vendor consolidation deals in that particular market. And we are very confident that when the macroeconomic environment improves and our clients begin to spend, we will see those benefits pay off.
Well, we wish you luck on that. But also let's talk about the hiring situation and how jobs at Wipro look. Saurabh, why don't you come in on this? Because while we're looking at the near-term headcount delay, getting attributed to excess hiring, etc., the question really is, looking at the future, how do you see generative artificial intelligence structurally change the hiring outlook? And fundamentally, of course, 2 years out, we are going to possibly see hiring numbers from IT companies get a lot lower versus the historical average. What are your thoughts?
2 parts to it. First of all, I think from the learnings of what happened across the industry post-COVID and the way we went on, excess hiring, the industry has learned and it will be more cautious in their approach as we move forward as demand comes back. Because we don't want to be in the situation in which we had been in the past. 1. Second, I believe that, structurally, things getting impacted by AI in terms of headcount kind of stuff may be a bit premature. We'll have to see how this evolves. We also believe that this will not only help us grow, get more opportunities with AI. So it's not about reducing headcount and getting much more opportunities. So we will have to see how this evolves and then have a clear call out in terms of headcount impact because of AI.
Thanks very much, the management of Wipro. Thank you for joining us and good luck on the journey ahead. It's a pleasure having you on India Tonight here on ET Now. Meanwhile, I was just looking while the management is speaking to us at Wipro's ADR. In trade, it is up right now. It's rising higher than 3 percentage points even as we speak.
If you like this video, then like, share and subscribe to ET Now.